What if everything about the end of the dollar and de-dollarization is wrong? What if Russia backstabs China and seeks to re-embrace the US dollar? What if Xi Jinping and Putin are not real friends, while China and Russia merely need each other to face America's threat? Too many questions. Maybe. No concrete answers yet. Probably. For years, we've heard the same story that dollar days are numbered, again and again. The dollar is dying, and Donald Trump is getting wildly mad. The US is collapsing, and China is becoming the new world leader. More frequently, we hear that China and Russia are teaming up, and that a brand new financial world is about to replace the current financial system controlled by the United States. Sounds inevitable. But what if someone told us the real story is the exact opposite? And what if the alliance that's supposed to destroy the dollar is actually proving why the dollar can't be replaced? Because behind the headlines, something way more shocking is happening. It isn't a story about unity. It's a story about weakness, dependency, and a quiet collapse of the biggest anti-dollar narrative on earth. And once we see it, we can't pretend to be blind. The world has been preparing for a future without the US dollar. China is building a new system to bypass the US dollar in transactions. Russia is pivoting to the RMB when the West sanctions it after the outbreak of the Ukraine war. BRICS is expanding its circle from 5 to dozens. A financial revolution is on the way, aiming to dump the dollar. But here's the twist. One of the key players in this so-called alliance is not getting stronger. It's getting trapped. And that trap might be the single biggest reason why the dollar isn't going anywhere. That is not a conspiracy, not speculation, but what happens when we follow the money. And the money tells a completely different story. Let's start with the story we already know. The US dollar dominates everything. Global trade, oil pricing, central bank reserves, and more importantly, the dominance of the United States give the United States massive power. It can sanction countries. Iran and Cuba know it. It can control financial flows. Argentina knows the pain. It can act like the gatekeeper of the global system, and Putin knew it when Russia was kicked out of the SWIFT system. So naturally, countries like China and Russia do not want that to continue. That's where de-dollarization comes in. The idea is simple: replace the dollar, build a new system, break US financial dominance, and the biggest symbol of this movement is BRICS, a growing group of countries that keeps getting louder about creating alternatives. New payment systems. New currencies. Even talk of a gold-backed system. After 2022, this narrative exploded, as Russia got hit with massive sanctions, cut off from the dollar system, and hundreds of billions of Russian assets were seized. The money supposed to be yours no longer belongs to you. That sucks. Not only for Russia, but the whole world, including the US and its allies. The US found itself in a vicious cycle. It lost the trust and confidence of the whole world. And suddenly, it looked like the de-dollarization plan was working. Russia turned to China. Trade between Beijing and Moscow surged to record levels. And more transactions started happening outside the dollar. China dramatically reduced US debt holdings and bought more gold. It pushed the yuan globally. Everything pointed to one conclusion: the dollar's days are numbered. But here's the problem: this story only shows us the surface. In reality, Russia may be secretly returning to the dollar if the sanctions are lifted, and the US, after Donald Trump began his second term, is trying to earn Putin back from Xi Jinping. Trump does not care about Ukraine as Biden did. He cares more about the de facto alliance between China and Russia. Although there's no credible evidence of Russia's secret pivot or hidden deal with the West, Russia is facing a dilemma. It may have to betray China someday. To some extent, Moscow fears Beijing more than it fears Washington. Russia isn't betraying China by choice. Its own economy is forcing it into a position that breaks the entire de-dollarization narrative. That isn't a sudden betrayal. It's a slow one. Driven by numbers, trade flows and dependency. Actually, Russia didn't completely escape the dollar system. It replaced it with something else. Something weaker, at least today. The replacement was not as strong as the dollar. After 2022, Russia had two options: collapse or pivot to the east. It chose China, and at first, it looked like a win-win. China bought its oil and gas and provided goods that Russia couldn't get elsewhere. Trade exploded between the two nations. But look closer, Russia is selling more for less. Huge discounts on energy lead to lower profit margins. That's not power but desperation. And what is Russia getting in return? Everything: cars, electronics, machinery, and more. China became essential to Russia, but here's the imbalance: Russia needs China desperately, but China doesn't need Russia that much. Measured by the nominal GDP, Russia is like China's Guangdong province. And this is where the trap begins. A trap for Russia and the West, but it favors China. The West made it happen, and Russia was forced into it. By shifting trade and reserves into the RMB, Russia tied its economy directly to China. If China slows down, Russia suffers. If China demands lower prices, Russia agrees. That's not independence, that's dependency. China also knows it, so it wants to change the narrative. It wants to convince Moscow that the two countries are strategic partners, and that their cooperation has no upper limits. Think tanks and influencers in the West want Russia to stay away from China, and they carefully polish their words to alienate one from another. They hype the Far East anxiety, saying China will take it back someday. Russia and China cannot become brothers and sisters, as it will be the nightmare for the collective West. That is why the RMB trap theory emerges, aiming to undermine the idea of an equal partnership between the two world powers. Now let's talk about China, because the idea that China is trying to destroy the dollar overnight is another myth, which China denies all the time. China does not want to replace the US, and the RMB is not going to replace the US dollar. Yes, China reduced its US Treasury holdings, but not in a panic. Not in a collapse move. That is a strategy. China knows something very simple. If the dollar crashes, China also loses. So instead of destroying the system, China is adjusting within it, diversifying, reducing risk, buying gold, and slowly promoting the RMB internationally. But here's the reality: the yuan is nowhere close to replacing the dollar. It accounts for only a small share of global payments, and an even smaller share of global reserves. Why? Because it's controlled and capital can't move freely. China is not Argentina, it is not that stupid. China's capital markets aren't fully open, and trust is limited. And without trust and freedom, a currency cannot dominate globally. China knows this, and that's why it's playing the long game. Now let's zoom out and see the bigger picture of the BRICS, because the BRICS are supposed to be the big challenger to US dollar hegemony. A coalition ready to reshape global finance. But when we look inside, it falls apart. Different economies, different political systems, and with different goals. A shared currency inside the BRICS, like the euro, is almost impossible, as it would mean giving up control over national economies. And there's no way countries like India are handing that power to a system dominated by China. India wants to become a superpower, comparable to the US, and its people believe China cannot compete with India at all, not until they see China with their naked eyes. So what about trading in local currencies? Still a problem. Because nobody wants to hold each other's currencies. They're not stable. Not widely accepted. Not easy to use globally. That leads to bizarre situations. Countries are using third-party currencies to facilitate trade. For instance, Russia wanted India to pay in RMB for oil and gas because it found it could spend rupees only within India. India has little to sell to Moscow, except rice, which Moscow does not need. So if Moscow continued to sell its oil to India in rupees, it would have to prepare more warehouses to store that unusable Indian fiat currency. Within the BRICS, priorities differ across members. And they don't have a unified bloc, and that is why when Iran was attacked, BRICS members stood by. BRICS is not NATO. In the short run, the dollar still dominates. There are 3 reasons. First, inertia. The entire global system is built around it. Trade, finance, and debt. Replacing it would be massively disruptive. Second, scale. U.S. financial markets are unmatched. Deep, liquid, and reliable. Not even one system outside the U.S. comes close. Not RMB, not Japanese yen, not the British pound sterling. Even the euro is a regional currency. Third, trust. The US dollar is far from being perfect, but it's stronger than the alternatives. And in global finance, trust is everything. That's why even during crises, money flows into the dollar, not away from it. Even now, during the Iran war, the dollar is still strengthening due to a strong influx into the United States. It's counterintuitive. But unfortunately, it is real. Then, when will the dollar collapse? Drop your thoughts in the comments section and let us debate.